This is Stuff Back Roads of Illinois. We are bringing latest agricultural news and markets update on back roads of Illinois. Bring you like inside of the markets and interview with people in the agricultural industry for farmers and ranchers in central Illinois and across the Midwest. This show powered by AgriGold for central Illinois, your AgriGold reps Brett Lahr. He is your AgriGold reps for central Illinois. Today's edition of Back Roads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we were glad you're here on a Wednesday. We are talking about the commodities markets with Mike North from Everag in Platteville, Wisconsin. We were talking about the wheat markets. The wheat has been of poor quality in the plains of Nebraska as well. We'll talk about that with Mike. Otherwise, this time is for your agricultural news and markets update sponsored by AgriGold for Central Illinois and Kyle Bumstead from Allendale Incorporated. This harvest progress is completely different from last week in the Midwest. However, in the Mississippi River is lower since September 11th. There is no rain and storms over the fall in the Midwest. That's backside that there is any snow in the Dakotas as well. The presidential election is coming for next Tuesday on November 5th. We will see on the results for next Tuesday night. We can talk about the Farm Bill as passed for this year. This Farm Bill is going to be passed for this year in Washington, D.C. We were coming back with Mike North from Everett on back roads of Illinois. This is the open numbers of the commodity markets from Kyle Bumstead from Allendale Inc. Corn futures are up at 5 to 6 cents a half. Soybean futures are up at 5 to 4 cents a quarter. Wheat futures are up at 4 to 8 cents a half. This is your livestock markets update sponsored by Kyle Bumstead from Allendale Incorporated. Cattle futures are down at 5 to 10 cents. Feeder cattle are down at 5 to 6 cents a half. Lean hogs are up at 4 to 5 cents. Crude oil are up to 9 to 10 cents per barrel. Dow Jones are up to 9 points. We are talking about the commodities markets with Mike North from Everag in Platteville, Wisconsin. We were watching for the wheat markets from yesterday. We were talking about it with Mike. How is the corn yields for in the field for corn harvest progress and the wheat markets?
Well, corn yields continue to come in strong, and as you look at the way the USDA has been pegging that, it continues to surprise us at how good it is. And I'm sure there's people that don't buy into the USDA numbers, but in its most recent report, it showed us a national yield of 183.8, which was 0.2 of a bushel over the number they gave us in September. And as we talk with clients all over the country, most everyone shares with us that the yield was as strong as they expected or better than expected. There are some areas that are surfacing further north that are a bit more variable, especially in Minnesota. But nationally, yields are very, very strong. And so that's helped keep some pressure both on futures prices and locally as harvest progresses on cash prices in the spot markets. As you inquire about the wheat market, there has been some dryness in the plains, albeit the conditions of the wheat are in pretty good shape. If you look at the most recent numbers, winter wheat conditions as of this past Monday had a good chunk, 38% of the planted wheat in a good to excellent rating. That compares with 47 last year. And as we look at how that breaks down through the entire rating system, you could say that this year and last year have swapped out the good and fair categories. Whereas last year 39% was rated fair, this year, 35% was rated fair. This year it's 39%. And whereas this year 33% is good, last year it was 39%. So those two categories have kind of flip-flopped. We are 3 points below on the excellent rating. We are 5 points ahead on the poor rating. So certainly not the quality of crop that we had last year. And as you've been watching the wheat prices, we've watched as wheat in the course of the last month and a half while we've been enduring this dry weather has really just oscillated back and forth. Late September, when the dryness became a story, prices rose very quickly, and we saw March Kansas City wheat get to a price of about $6.38. It has since fallen back to a closing price today of $5.89. So, the market has kind of gone back and forth. Not really sure what to do with these condition scores, and surely not willing to jump too hard on where things are at when considering the fact that the dollar has gotten stronger and we're trying to make a case for reestablishing ourselves in the export market.
Let's start our conversation about crude oil, or high, especially in the Middle East for right now. Could you tell our listeners about the crude oil markets?
Absolutely. So if we go back to early October, we saw the movement of Israel into Hamas territory, certain strikes being wagered against the Hamas rebels, and that really got people excited about what that would mean, especially as the U.S. was somewhat involved in terms of managing some of the counterstrikes and some of the attacks that came back from Iran. That heated up the market for sure, and prices quickly moved from mid 60s to mid 70s, and since that time, we basically worked our way back to mid 60s. So the crude oil market has, kind of like my comments with regard to wheat, been oscillating back and forth here for months. But when compared to prices over the course of the last several years, we're actually towards kind of the bottom end of the range that we've watched. If you go back to last year, late in the year, we got back to the mid 60s. Early in the year, we were lower 60s. Back in 2022, we spent some time in the upper 60s, low 70s. This price zone has been very supportive over the last several years, and as we head towards an election, we probably aren't going to see a lot of movement away from this territory unless some major world event takes place. But crude oil certainly not the highest price that we have seen. And in fact, that particular weight or burden, if you will, as we talk about the broader commodity investment opportunity, has weighed on the broader commodity pool of products. So as we watch energy markets get a little bit more fiery, a little bit more volatile, that generally invites a little bit more participation from outside speculative interests. And as those prices rise, generally that is helpful to all commodities in the agricultural basket. So with prices back towards what we'll call the lower end of the range over the last few years, we certainly have watched its impact at the pump as much as we have on investment by speculators in the broader commodity basket.
How is the diesel markets in the upper Midwest? You know it's time to get dry for the grain after the harvest season.
Well, yeah, as we talk about gas prices in general, a lot of the corn is dried on natural gas. And when we look at the price of natural, have any real concerns about it. I think you just have to acknowledge that cattle have been moving into finishing operations a little bit faster, and that could, partly be a byproduct of the dryness in the plains, the maybe the speed of harvest. We're way out ahead of normal harvest pace for corn, and you might just see a little bit of faster movement into the feedlot this fall as a byproduct of some of these other influences. So, all the way around, we are acknowledging the higher placements, but I don't think it really changes the game. We're still looking at, a tight supply of cows, still have heifers going into feedlots without any, really noteworthy change in trend. So our breeding herd just, isn't growing very quickly or at all. We'll see what comes in the January numbers. But, as you look at the bigger picture, the supply side, has a great story to tell. But you have to balance that against the demand side. And I think that's where, if you're going to have some concern, that's where you put it, is on the consumer. But right now, supply is tight. It will remain tight. The only real fix for that is, like I mentioned, heavier carcass weights. And, that's certainly been the trend over the course of the last many months.
Do you have any final thoughts or recap of our conversation, Mike?
Nothing that we haven't already covered. I think, top of mind for a lot of people right now is the coming election, and we're now down to just days ahead of the big vote. And, I think there's a lot of people concerned about, what does one president mean versus the other with regard to trade. We are not getting too wrapped around the axle as it relates to one versus the other. I think, it's hard to say exactly what to look at if there's a Harris presidency. You should probably expect status quo, given that she's already in the White House. The idea of a Trump tariff is real, but the thing we have to recognize is he's already gone down the path of negotiating. And so this long drawn out trade war is unlikely. Quite likely the first move would be to go right back to the table and, make sure that the Chinese complete their phase one agreement and perhaps even step into phase two, which, when you balance the tariff conversation with, what they've agreed to purchase in their first round of negotiations with Trump, it could actually be a real boon for trade. So, that's, I think, the balanced notion that you have to take there. But, as you look at markets, my advice is always very simple, and it does not change. Markets go up and markets go down. And, while we look at markets that have seen recent rallies, I think it's important to acknowledge those rallies laid against the backdrop of what the inventory situation looks like, the demand situation looks like, and to, really speak plainly into what the opportunities and risks are. And we've been advising clients on pretty much every front, with where beef prices are at, where milk prices recently were, where grain prices rallied to over the course of the last several weeks. We've been active sellers of these rallies, and I think it's important for producers to continue in that same spirit, to sell the rallies and defend themselves from the risks that do evidently and obviously lay in our markets. And that is just good practice for anybody in production agriculture.
Where people can find you for your consulting services for their premium risk for right now?
The easiest way to find us is go to our website. It's very simple. It's www.ever.ag. That's www.ever.ag. And you'll find my profile and my contact information. If you want to call me directly, you're welcome to call me here. 608-518-3106 is my direct number.
Thanks, Mike.
My pleasure.
That's Mike North from Everett Gladback Roads of Illinois. Get the most for every acre with AgriGold seeds for your field. You can visit our website at agrigold.com or call your local retail dealer today. AgriGold choose seeds for Central Illinois.
No.
This is close bell numbers of the commodity markets from Kyle Bumstead from Allendale Inc. January feeder cattle dollar minus 2.050, closing at $241.975. December live cattle dollar minus 1.525, closing at $186.425. December lean hogs dollar plus 1.400, closing at $1.84.375. December corn minus 2 single quote 2, closing at $4.11 single quote 4. January soybeans plus 13 single quote 6, closing at $9.92 single quote 6. December Chicago wheat plus 2 single quote 6, closing at $5.73 single quote 2. December KC wheat plus 1 single quote 4, closing at $5.75 single quote 6. Closing quotes provided by Kyle R. Bumstead Branch Office Manager Erickson, Nebraska 308-708-7340 Allendale, Incorporated. Thanks to our friends from Allendale for bringing the final numbers of trade. Thanks to Mike North from Everett, we're running out of time on our show. You can listen to our show wherever you get your podcast. That's been Back Roads of Illinois. I am Cesar Delgado. Have a great day.